some of the things that we've built at PMI to really help our franchise network with is that books piece, because it is such an important component that is often an afterthought, right? The majority of us are out there trying to worry about growing our business and managing our team. And sometimes, unfortunately, accounting can kind of just become that necessary evil that we decide not to prioritize. And I can assure you that it's not the right thing to do as you consider selling your business. And I'm sure if an auditor knocked on your door, you'd probably, fly to Mexico really quickly, because you might end up owing some money.
Hey everyone, welcome back to another episode of the Managed Exit Podcast. Again, you got myself, Aaron McElhenny. We've got Hunter Goodall on our M&A team, and we've got a big guest today, local celebrity in the office, James Phillips, joining us. How's it going, James?
Doing well, guys. How are we today?
No complaints, not one. I got a little late start today, but I'm ready to dive into this episode and just keep it kind of free flowing. Again, this is all things acquisitions, and James is a big part of what we're doing here on the residential side as far as local PM business consolidation and acquisitions. But before we dive too deep into that, James is also very likely the best golfer in our office, and I think you got a hole-in-one not that long ago, right?
My first hole-in-one. I'm still debating if it's legitimate because it was a short hole, so I don't feel great about it. But everyone else thinks it's pretty cool. So
yeah, Hunter just hit in for, I think you was it 167 yards?
167 yards.
See, man, that's way more impressive. That's way more impressive than my hole-in-one.
I'm sorry. Hole-in-one.
This was an experience, man. It was like I was in mid-sentence talking to Aaron. I wasn't even like looking at the hole, and I just hit it while I was talking. And we watched that ball, and we were like, "Oh, dude, I think that's going in."
Yeah,
and it blew our minds. And I was like, "This is the shot. This is what happens. Like this moment is why people play this sport." I was like, I'm hooked. Now I got to spend the next 40 years chasing another shot like that. James, you're going to spend the next 40 years chasing another hole-in-one.
Yeah, that's the same thing with fishing, man. The tug is the drug. That's why you keep going back.
Yeah, that's hilarious. So we'll talk about golf a little bit, but obviously it goes hand in hand with acquisitions. And we have fun while we're golfing. We have fun in the office too. But yeah, let's dive in a little bit today, and then maybe we can all golf next time Hunter's in town too. Let's talk about this a little bit more. Like I know when Hunter and Kyler is our man behind the camera.
The guy in the chair.
Our guy in the chair. We were talking about getting guests on the show, and your name came up right away. Like just knowing the growth trend that we've seen on the acquisition side too, and like how much we rely on your team as well, a big part of the transition of these businesses that we're helping people buy. So yeah, obviously we just want to get your opinion on here, and also just get, people to have their eyes on you too, just knowing that you're a resource in this space quite a bit. But I know you've been a part of some of our bigger deals this last year. But yeah, maybe let's dive into your role at PMI and kind of like how long you've been with us and kind of your team. A little breakdown there would be awesome.
Yeah, perfect. So I've been with PMI for about 4 years. I actually started here as our director of books, so a little bit more on the accounting side, which of course bodes well anytime we're talking about acquisitions and being able to really look a little bit deeper into that business, not just from a compliance standpoint, but of course from a revenue standpoint as well. I'm currently the executive director of residential and commercial property management here at PMI. So I dabble a little bit on the commercial side too. Pretty interesting. PMI was a big change for me, coming from kind of being in the property management, being in a local business here in Salt Lake, to seeing this, different franchise-esque version of it. And it was amazing. I was really surprised when I got here to see, everything being built and trained and all those sorts of things. So currently, we're managing just under 34,000 residential units. Maybe to give a little bit more flavor there, we see residential, of course, as single-family homes, townhomes, condos. We also consider small multifamily as a part of residential. So be thinking duplex, triplex. We're not talking large multifamily properties, but smaller we do consider residential. And that's consistent of about a little over 300 offices that we have now across the nation. That's 48 states that we cover. So yeah, it's just amazing to see the growth of PMI and see how well we're kind of spread across the entire US. It's amazing.
And we kind of pull out multifamily a little bit, right? So
Right.
your 34,000 mentioned, that doesn't include kind of this separate multifamily portfolio that's still growing uh,
Exactly.
in our space. And
Exactly.
a lot of people don't like when they look at our brand and they hear that we're managing that many doors, like that's across multiple states, right? Like the franchise model is super unique because a lot of people I've just run into this where they think that we're like this massive consolidator and we're running everything. You and I and Hunter are just managing everything from Utah. It's not true. Like we have local offices, so
Right.
like our buyers and sellers, they live down the street from each other, and so our franchise partners are actually the ones managing in all these unique markets across the 34,000 plus stores.
Yeah, I think that's really the beauty of it, right? Is like you have that local relationship with that office, and that's important to anything within the real estate industry. Whether you're talking about business purchasing or selling, right? That relationship is super important. You want that local person. You want to be able to see that person. You want to have your boots in that office, really understand even the culture of that office. So yeah, it's really interesting and just a lot of fun to be a part of.
Yeah, that's like one hurdle though, and I think like from the kind of client support side of things, right? Where like Hunter and I, we're dealing with sellers that have relationships with their clients and they think that they're handing off something to a bunch of guys and a bunch of young guys in Utah. And so that's actually one like disconnect that we always have. It's just no, actually we provide industry guidance and support and we make sure that our franchise partners are being taken care of, but the local effort's still there. So like when sellers hear that, they're used to having these big companies come to them and say, "Hey, yeah, we're managing everything from Austin, Texas, or the Bay Area, California," and like that is like a big shift when we just say, "Oh no, James and Hunter and myself, like we're just here to help you transition this business to our local buyer who's literally down the street." And it's just funny that I'll always kind of pitch that element in a lot of our calls here because that's something that people still I fight against that every day. Like we're just providing resources, but the buyers and sellers, they are all local business owners. So pretty cool
Yeah,
overall.
super
I
cool.
think that's go ahead.
Oh, I was just gonna say it's so interesting, like from a resource standpoint on our side too, where that 34,000 doors and however many hundreds of offices is very diverse. And what I mean by that is we've got offices managing thousands of doors that have large teams already in place. But what we've seen a lot of this year is actually our newer offices. So August workshop just happened. We had brand new franchise partners leave and kind of get out in the real world with no doors under management who are kind of trying to get that first business. And we've seen some of those business actually do acquisitions earlier on in their kind of life cycle journey with us, which has just been really cool to see. But of course, the resources are much different from a well-established office who kind of has everything up and running to somebody who's just getting into property management. The demand of resources is so significantly different. It's been a lot of fun to work with those teams and help them find success in the business they've acquired.
I think that's a big factor into what makes us such a strong acquisition department here. Like we do more property management acquisitions than anybody in terms of volume. Like the number of transactions that we do, it's just so many and it's across the country. But like Aaron said, we're not the buyers at the end of the day. James is not the one buying this and managing these properties. I think that's a huge strength to us is that you're right. It is the local person there. It's someone just like the seller. They're just down the street. We're working on a deal in Florida right now that turns out buyer and seller, their offices were less than 6 miles apart from each other.
Oh
And
And
well.
they
so it's
never
like,
knew
and
each
it's
other. Yeah.
yeah, it's an existing operator who's already operating in this space, already knows how to do property management, and they're gonna take over this operation, and it's gonna be a very smooth transaction. But even if it's a brand new franchisee, like you just said, James, we've had new franchisees that just came into property management who are doing these seven-figure acquisitions. And the reason that that's possible is because they're not alone. Right? There's so many people out in the market right now that are trying to buy businesses. We talk about this all the time where you get these college kids coming out of college and they're oh, dude, I'm going to go buy a business. I have no idea what I'm doing. I have no experience, but somebody's going to give me 100 grand for a down payment to buy this company. And like, good luck with that. You know, you're all on your own. You're going to buy this business. That's a huge risky investment, but not for our franchisees because they've got someone like James, an expert in this space, to help them make sure that they're successful. You know, James, it's not just James, it's James has Trent, you've got Sam, you've got a team backing you to help make sure you've got a team of experts to make sure that these franchisees are you know going to be successful and know how to operate these. And so it's a really cool model that we have here.
Yeah, it's great. The team's huge for our side of things, that's for sure. Sam, who just maybe to clarify for everybody, so Sam is our operations manager, so she's really deep into process, into how to handle the work order, how to market the property. You've got Trent, of course, on the other side, who's a little bit more of like that higher level, deep growth kind of focused member of our team. So you get kind of different flavors with the different team members. And ultimately, what we're kind of trying to do within the residential team here at PMI is kind of mimic, the operations that happen within the property management business. So you have the sales aspect, you have the ownership aspect, you have the operations aspect, and so we're kind of trying to cover all those bases to ensure of course, that our franchisees or your franchise partners are getting the support they need across all facets of their property management business.
I'm thinking about how your team integrates with ours, James, and just even how it's continued to build out as we start doing larger acquisitions and have for the last, our average deal size has almost doubled in the last 12 months. So, like us relying on you and your team, especially in the due diligence piece, is like huge for us. Hunter and I are really deep into the deal terms. And then, obviously we lean on your team to, go through some of the financial aspects of this regarding software, regarding triple tie outs. And I think it's good maybe for us to talk a little bit about, for people that are buying, but also for sellers, like what are some of the things that they should really be doing to prepare their business for a sale, or for them to exit?
Yeah, that's such a good question. Especially as it relates to like this idea of being triple tied out. And so maybe just briefly so everybody knows, I mean, really what we're talking about there is compliance with your trust accounts. So some states see that a little bit differently. You might have one trust account, you might have two. That doesn't really matter as long as it's compliant with the state. But ultimately, we see a lot of businesses who forget how important closing out accounts are and reconciling accounts and making sure money, of course, is where it needs to be. And so, as we go into some of these evaluations, one of our biggest concerns is that money is where money needs to be, right? So that all tenant security deposits are accounted for, all owners' money is accounted for, whether it's just their reserve because you just paid everybody out, or it's more than that. That's such an important component. And especially when I imagine when it comes to the value evaluation, because I have seen businesses spend thousands, tens of thousands of dollars to get their accounting kind of back up to par. So definitely as you position for a potential sale, I mean, your trust accounts need to be top of mind because anybody looking at that business is going to run like the thing is on fire if money is not where it needs to be, or they're really going to be kind of picking at you hard to ensure that that's taken care of before any sort of transition happens. Because the fear of that new business owner, right? And probably depending on how you buy the business, you guys can probably talk about that side a little bit more, is like they might be assuming some of the risk that your business already has, I believe, in a specific type of sale. Aaron, maybe you can talk a little bit about like those two different types of sales. But anyway, yeah, if I were the one looking at the business, which often I am, kind of on behalf of some of our franchise partners, I am waving the red flag. If those trust accounts aren't reconciled and there's a bunch of past due or uncleared items in those accounts, that's a immediate red flag for us.
Totally. And I mean, just for us, I mean, I think we can look at a business pretty quickly. Like we've looked at so many together now, just even everyone on this call, that like we can tell if the valuation is going to hit, whatever number they're trying to, or what multiple it's really going to be at. And so a lot of the coaching that we even do, even to sellers, is like, hey, we're not going to even get involved in a transaction unless these thresholds have been met or these checklist items have been hit. And so I would just say, even from like a succession planning or exit planning piece, like working with our team to even prepare your business to sell is critical. Like if you want a PMI buyer to step in and you want our team to help with transition, then we're going to give you some guidance on what you need to do before we can even formalize anything. So a lot of sellers, they like, I would just say that open transparency where we're actually providing them information that sometimes even helps increase the value of their business. Like they're not getting that insight from many other resources. And so when we talk about like the win-win scenario, like Hunter and I are deep into this mindset where it's got to be a good deal for everyone. And we're only going to encourage, good transactions. If it's something we're not comfortable with, or if Hunter and I aren't even, if we wouldn't lend on it ourselves, then we're just going to go find another deal. Like there is no shortage of transactions out there. Um, but yeah, like I said, we really rely on your team to help that piece of it. And for a lot of sellers, it's not just Hunter and Aaron and Connor on our team and Kyler on our team too, but um, it's really a complete support staff that they're getting from PMI Corporate. And I think there's 100 or more people on our corporate team right now. So yeah, no, you bring up a good point. Like things need to be clean. The books need to be clean, needs to be triple tied out. We want a fair valuation, right? Like we're happy to get a seller a good price on their exit. And obviously we want a deal for our buyer too. But what about any other, kind of maybe some best practices or any other kind of deal killers that you or your team see just from a diligence standpoint? I know software transition is a huge one too. So maybe we want to dive into that a little bit as well.
Yeah, software transition, I definitely don't think we see that as like a necessarily a deal killer. I mean, if there's no software in place, which for those of you on the call, yes, there are still property managers out in the world not using software, if you can believe
Spreadsheets only, right?
it, which is crazy.
Just
Um,
files, boxes and boxes of
yeah, that's
paper in the
right.
office that we're just like, oh, this is a pain.
Yeah, so the industry's definitely matured, where any position or any business positioning themselves for a sale, I mean, not having software and systems and process in place is definitely going to be an issue. Like, there's no doubt about that. Where PMI comes in, of course, where the residential team is, we do have the resources to provide a lot of those things for our folks. So I would say it's a deal killer, but it's definitely a big question mark for us because really what you're talking about with the software change is as we look at that, what it is, we're looking at what it means for the client. So not even the individual purchasing the business, but what it means for your current client that is now not only going to, shift essentially to a different ownership group, a different business owner, but also different systems, different software. So them having some of those pieces already in place, of course, makes that transition easier. Of course, the fear being that, if some of those clients do leave through some transition like that, then that's going to be, of course, a concern from the buyer's side. And so having really tight processes and standardized management agreements, is probably another big one we see where, property management is tough, right? It's not like some crazy, crazy margin thing. Like you've really got to have the system figured out to make it work. And so, having a standardized offering where you don't have, 100 different clients on 5 different property management agreements
Sure.
with this leasing fee on that one and a different management fee on this one. And well, this person, we've got to give them 3 property valuations a year. And this person we don't do any for. Like that's really hard to accommodate operationally. So having some standardized pricing really helps with that. And yeah, that relationship that you have with those clients does matter. And so, as we look at that relationship that they have with you or have with the brand, we definitely want to take that into consideration to understand if any of those are going to kind of churn and potentially fall out the bottom of the bucket during a transition.
Yeah, I'd say client retention is always the focus for us, right? And oftentimes there's deal terms that require a certain percentage, come over, right? If there's some loss through a period of time, it's not uncommon to have some kind of clawback language in agreements that, if a client leaves for whatever reason, not due to like the negligence of a buyer, just for example, but it will absolutely affect the deal terms and the payout. So the tighter your systems are, the more standardized, the processes are, and even just more consistency within the management agreements is is key. Because Hunter, you and I both looked at that too, where there's like 5 different agreements within 300 doors, and we're like, why are there all these special exceptions in here? And you can tell that's like that business owner client negotiation where they had to make some concession somewhere. But yeah, that lack of consistency, for us, that can impact value for sure.
Like an example of you got 500 properties and maybe a third of them are not assignable contracts. So now we got to go through 500 contracts to see which ones are not assignable because like James was saying, there's two different types of acquisition sales. You have an asset purchase, meaning buying all the assets, none of the liabilities, and we're going to just transfer over all these contracts. So property management is kind of a unique acquisition where it's like there's typically not anything on the balance sheet. There's not any assets, there's not equipment, there's nothing tangible. The business is based off of contracts, pieces of paper with 60-day outs. And so it's like the primary thing is we got to make sure that these contracts transfer over. And if they're not assignable, we got to go figure out which ones are not assignable and we got to make them assignable, either renew them or we have to change the entire deal structure where it's not an asset purchase. It's now a stock purchase, meaning I'm buying the assets and the liabilities. And that makes due diligence even harder and more expensive. And so it's like if the contracts are non assignable, it makes the deal so much harder. But then having like a mix of some of your contracts are, some of them aren't. It's messy. It's disorganized.
Yeah, we're dealing with that on one deal right now in the Midwest. And it's involving the seller has to be super involved and they're doing a lot of personal outreach to get assignment consent. And that's something we're actually requiring before close. But had the seller even had a year in advance to prep, they could have gotten addendums to their agreements to include that assignment. And so it's just one of those things to look at for down the road. If you're not thinking about selling tomorrow, but you're prepping for the next 6 months or 12 months, like that's one of those things. But this kind of leads into this next point, as far as like add value scenarios and value drivers. And like, I think it's a good thing to bring up too, just as far as not just the buyer side of things, but sometimes sellers are leaving opportunities out of their business. And it's not going to help their business if they're not up to speed with local market norms or industry revenue streams. Like this could be to their benefit. Like sellers could be integrating these things because these are things that we might integrate down the road too. But like, what are you seeing? And I know you work with a lot of conversion offices too, James. And
Yeah.
just for like, people to understand what that is, we have existing PM companies that choose to join PMI and convert their businesses into a PMI. But I think we should talk a little bit about kind of like value add scenarios and some of the revenue streams that we're seeing out there.
Oh man, I love that because that's such a hot topic right now. Like even in the industry as a whole, this like idea of doors versus client value is this big discussion, and it's so funny that just the other day I met with a new conversion office. Actually, if anyone wants to follow me on LinkedIn, go ahead. I just had a post about this, which was when these businesses come in, and so I'll kind of wrap this around back into the seller side of the acquisition, but ultimately, like, the question always coming from these new conversions coming in is like, I want to grow doors, right? It's doors. Give me more doors. I want to add 100 more doors. I want to be at 1,000 doors by the end of the next 2 years,
I
whatever.
always say that, right? Yeah. It's
That's
like,
what it is, right? And I think that the whole industry really has seen it that way for a long time. And that's starting to shift where, after having kind of a consultation with this individual, I mean, it was clear. I believe his business was right around 200 doors, maybe. That just by focusing on his existing portfolio of business over the course of the next year, if we're able to implement some of those revenue streams that Aaron's kind of alluded to, we will be able to increase his profit or his top line revenue by 60%. 60%. So yeah, same thing with what I was talking about with like these older property management companies that aren't using software or using really old software. It's really the same idea with a lot of these revenue streams. The industry's really moved in a direction of what additional services do residents or owners want from us, and of course, us by providing those services ultimately create additional revenue streams for ourselves. And so, some of the big ones I think that are top of mind would be like asset management from the owner perspective. So how are we working with our existing portfolios? What additional services we can provide to ultimately help the client, the owner client, grow their portfolio of real estate. So you're seeing some of that on the owner side. You're seeing a little bit of insurance. You're seeing a little bit of, protections or guarantees that a business might offer and kind of monetize to protect from things like eviction or, damage to the property and different things of that nature. And then of course you've got the other resident side where, what's the ultimate goal for our residents? I think as property managers, we often forget that, the resident is just this essential piece to our business. And I've heard so many property managers say, "Oh, we don't care about the tenant, right? We don't care about the resident in the home. We just care that the owner's happy." And I understand that for sure, but ultimately the resident's the one paying the bills, right? They're the one paying the rent. They're the one cash flowing for the owner. They're the one ultimately paying our salaries. And so it's just such an important component. So what additional benefits can we provide to them? And so things like internet. If we're able to provide internet and create additional revenue streams through discounts, we're able to leverage because of size or because of a partner we might select to help us in that. Those are wins for us and ultimately additional revenue streams. And so I think the message ultimately is just that if you have this model where you've got four revenue streams, which are probably management fees, leasing fees, late fees, and application fees, like you really need to start thinking about diversifying that, because you're certainly not creating as much value within your business as you could be. So ultimately, what I'm saying is, sellers be worried about your door count, absolutely. But the bigger thing you need to be looking at is revenue. An operation of 500 doors that doesn't have the revenue to be able to support and compensate a great team is a risky business to buy, right? And so, yeah, we just want you to understand that that diversification of your revenue streams is ultimately going to benefit you and increase the valuation of your business.
That's interesting. Like we had that conversation with so many sellers because I don't know why it's an industry thing. Everybody in the real estate industry and the property management industry, everyone's focused on doors. Hey, what's the price per door?
Yeah.
Right. And it's like, no, it's how are those doors performing? Having a large portfolio mitigates your risk because if there's churn, if some of the contracts, if 10 contracts leave over 200 doors versus over 30 doors, that's a big difference, right? But so it mitigates your risk, but how are those doors performing, right? Are you squeezing a lot of revenue out of these doors and getting a lot of opportunity beyond just management fees? That when we see that, it's like, oh, this is a good looking business when it's like we see a lot of revenue streams, a lot of ancillary fees and things that can help balance this business out instead of just being so singular on, hey, we do is collect rent and it's price per door. It's like, no, we've got an operation here. We've got revenues for all these different doors and balance in our company where it's not one dimensional.
Totally. Like, I think just something super relatable here because I think we're in like a pretty unique position. Like, I mean, the majority of our time is spent helping franchise partners buy other property management companies, merging that with their PMI office. But that other play that I kind of mentioned, this conversion office, like Hunter and I will talk to people that they think they're ready to sell. They're maybe not ready to sell. They're actually kind of excited about growing, but maybe don't have the opportunity to do so. So we actually include our conversion team in that message where it's like, hey, maybe you want to hit a larger exit price. You go through evaluation with us. It's not where you want to be. So how are you going to get to that $2 million number, that $5 million number? It's usually a series of acquisitions. And that's something that you can work with our team on too. By converting a business into a PMI location, you can get access to our team directly. So like we're kind of on two sides of this. It's like, yeah, we're happy to help you. You know, we'll definitely work with a franchise buyer to help you exit your business. But if you want to keep growing and you want to join us and get access to James and his team, like a conversion into a PMI office is kind of a unique play. And so I don't know if there's other people out there that even do that. I don't know in the franchise space. I don't know if they're actually doing conversions like how we are. But yeah, I'm just talking to a guy the other day who's a recent conversion. in Michigan, and I think he has this. Is this who you're talking about?
That's what I'm talking about. Yeah,
I'm
exactly.
not going to name drop, but yeah, he's got 200 doors, and like the first thing that he said was like he and his business partner wanted to do local acquisitions, and so we have a custom game plan that we're building with him and his business partner just to solicit, target, and acquire, over the next few years to hit a pretty large exit number. So, um,
Yeah, he's gonna be a great partner for us for sure.
totally. And that's a what we call a conversion office. So if you want to sell, we're happy to help someone, buy you. But also if you want to keep growing, there's ways that you can work with us too. So it's kind of a unique model that people aren't really used to getting that level of transparency. Go through
Yeah,
a free business valuation, hit your number. Awesome. We'll help you with that. If you haven't hit your number, we'll also help you get to a higher exit by doing this. Like it's kind of an odd play, right?
it totally is, and it's so funny that we are talking to the same individual because I got the exact same message from him. Like he has no interest really in growing organically at all. He definitely wants to do it through acquisition, which is great. We love that, and the amazing part about that is with conversion. So, like when a new franchise partner comes into the brand. So let's think about somebody who is not currently in the property management space, doesn't have an existing business. Of course, we have kind of this whole journey spelt out for many years that they're kind of following. But that journey is so different for a conversion office, so an existing business that's already there, and so we really come up with a more customized plan as it relates to you. Like Trent on my team, right? Like I was saying earlier, he's our organic door growth guy. But do you think this conversion we just had is going to be talking trend? No, like that's just not what he wants to prioritize. He wants to prioritize, managing his existing portfolio in an effective way so that when he is ready to do that acquisition, he's got a business that's really scalable and can handle that additional door count coming in. So yeah, it's just so cool how we all get to work together that way and really round out like this whole experience um, of of acquisition. It's just the coolest thing.
It's still fun for us too. Like Hunter and I are always chatting about this, and we realize like we're doing more transactions than any other group I'm aware of out there, and it still feels like we're barely scratching the surface. Like we keep throwing out this wild goal for 2026 of 50 million in transactions. And the more I talk about it, the more excited I get about it because I know the opportunities there. And so like from our buyer side, like that's where we want to be. Like we want to help people exit their PM companies. We want to buy them. We want to help franchisees spend $50 million in transactions next year. And that's that number seems big, but when you look at our market share, it's such a small piece of the actual market. It's amazing.
Yeah, totally. Property management's not getting any easier. I mean, like regulations keep getting passed, it keeps getting harder. Our owner clients who we've been looking at for many years who've been able to really cash flow well on their properties and continue to buy more investment properties, rates are not in a position right now where that's happening unless you've got a lot of cash buyers, which is, few and far between. And so, yeah, property management's not getting any easier. We're going to have to continue to figure out unique ways to ensure that these businesses are sustainable over time. And we're trying to keep up with everything coming out of California, Colorado, New York, and seeing how those changes in those markets are somewhat starting to bleed into other states and other markets, and of course, trying to stay ahead of that. I've really quickly got to come back to this thing of door count because I think an important aspect of that is your doors per owner. I think is another interesting thing within your business. That's something you might want to look at over the next couple of years as you consider selling. Because if you've got a portfolio, let's say of 500 doors, but you've got 5 owners, like there's some additional kind of
Yeah.
scariness there where you lose one
Totally.
owner, that's a fifth of your entire portfolio and a huge impact to the business, the revenue of that business. And so we really like a sweet spot. Like I love to see a sweet spot of around 2.5. I think is great. So 2 doors per owner on average. That just makes your business so attractive because there are going to be clients that fall out. I mean, that's just the reality. When you do anything like this, including any like potential software transition, like it's just a natural thing that happens. And so if you can kind of mitigate that by having a diverse portfolio, where again, you're somewhere between 2 and 3 doors per owner. That's a really, really low risk as far as churn that might happen due to some transition.
That's one of the first questions I ask sellers. In my initial discovery call, we'll talk about, hey, how many properties are you managing? And then my very next question is, okay, tell me about the largest owners.
Yeah.
Right,
How
yeah.
many, like, who's the largest? How many do they own? And they'll be like, oh, yeah, I've got 200 properties and my largest owner has 25 of those. And I'm like, okay, that's a big risk element because if that guy leaves, his contract says he's got a 60-day out. He can just say, give notice, and he's gone in 60 days. Well, we just paid you 3 years worth for that contract. What are we going to do? Like, we got to figure out how to mitigate that risk because, yeah, if, like I said earlier, you have a bunch of doors, if 10 of those leave, okay, that's not a big hit when you have 500 doors. But if 10% of the portfolio leaves with one contract, that's a hit, like that's big. So those are factors that you have to be able to mitigate in terms of risk. Because when you're looking at an acquisition, we look at the financials, and those are supposed to paint the picture of the overall operation, right? How organized is this operation, and optimized is it? But the other thing is we got to look at all these risk factors. Like I said earlier, there's no tangible assets. There's no equipment that we can, if this fails, we can still sell all the equipment and make our money back, right? No, there's nothing like that. It's just pieces of paper with 60-day outs. So it's like we really got to make sure that we can reduce the risk as much as possible. And it's like sellers, if you want to make more money for your business, get on board and like make sure de-risk this opportunity for the buyer. That's if you can reduce that risk, you can increase the value of your business.
And also just create more confidence from the bank, right? Someone's likely lending on that deal. Keep it simple, keep it very clean, get the bank excited about the deal. Like that's our job, but you can definitely make it a little easier. That kind of client to property ratio absolutely impacts valuation. So yeah, that's a good one to bring up. And it does come up pretty early in seller conversations. I kid you not, there's probably a record breaker here. And I can't remember what market it was in, Hunter, but there was one business that actually had one client and it was over 200 properties.
Oh, wow.
Mhm.
It's like that's
Yeah,
a third party offering if you have one client and on all and
I
it's
was
100 or more.
I was on the phone. I remember that conversation. Oh, it was in the southeast
Let's be careful that we
somewhere.
don't
I
get
I can't say specifically where, but yeah, it was like the guy. I was like, okay, so how many properties are in this business? And then he was like, oh, there's a few hundred. I can't remember the number, but it was over 200. It was a few hundred properties, and I was like, okay, how many owners are there? And he goes, well, see, that's the thing.
Yeah.
It's just one guy. And I stopped the conversation. I was like, okay, before we talk about anything else, like you have to understand we have to get real creative for this deal to work. Like this is going to be financed. The only way for us to do this, you're not getting cash up front. It's going to be we're going to pay you a percent of management fees over the next couple of years as collected. Because it's like if he sells all those properties, or if he says, in 60 days, he's like, you know what? I liked my other guy. I don't know you. I'm going to go find my another friend that's going to manage this. It's like we're hosed. That was the whole portfolio. So I told him that, and he was like, "Yeah, you're right. I know. We gotta figure out how to make this work."
He's like, "Oh, yeah, and by the way, I'm the owner."
Yeah.
I'm all for getting creative and like there's always like a win-win somewhere in there. And maybe the win is that kind of rev share type model. Like we've done a fair amount of that offering lately on some smaller portfolios that just, you know, we're trying to get the seller something on some of the deals that maybe are even less attractive. Like there's always a win in there for the seller too. So I think Hunter, you and we're pretty open on like what options you have and like how quickly that could happen. Like, hey, we'll just let you know right now, the bank's not going to like it for these reasons. And it's probably worth from here to there. And we're happy to find a number that works for you with some type of either seller financed option or profit share piece. So like finding that creative win-win is actually super fun and kind of rewarding in its own way. But yeah, you got to think about all those things. As far as risk mitigation goes, it's risk for everyone, right? Like we want a smooth transition, and we'll be as transparent as we need to be to make sure it's a fit, right?
Yeah, definitely. I think from the seller standpoint too, one thing I was going to bring up is like, I've definitely worked with some of these where the seller and buyer maybe don't always see things the same way, but I think definitely as a seller, one thing that you should be open to as you go into that is like, not only is this person going to get really intimate into your business with financials and different things like that, but like ultimately there's, I think, an expectation of you to help facilitate, the transition of the existing portfolio, just in the way that, we want communication to, of course, be consistent. Again, this really is all surrounding back to this conversation of, we don't want people churning out because of clawbacks or different things that might be in there. So ultimately, like if you can stay really open with that buyer, like give them a lot more confidence that you're kind of going to be there and be willing to talk to some of those clients maybe before the actual transition happens. Like that's a really important component to really have that trust with the buyer. I think that's a big thing for them too.
Yeah, there's definitely a relationship piece there, right? I mean, I'm trying to think of a scenario. There's been a small amount of deals where there hasn't just been like complete alignment on I'm selling my business to someone I'm confident that's doing a better job than I'm doing, right? Like a lot of these sellers know that they've missed out on a few things and they don't need to change their model. They did a good job getting it to where it is, and they're, overly confident in our buyers that are just up to speed with where they need to be in the market. So we just got off a call, Hunter and I did just before this. We have a weekly diligence call with one of our buyers who's under contract on, it's just over 1 million, I think. Maybe it's a couple thousand or more doors, but there's definitely alignment for buyer and seller. Like that seller is confident in our buyer. They're pitching this buyer to their clients. They're actually going through each client and reaching out to them and telling them about the retirement and what the transition is going to look like. And that's a level of commitment that we don't get from every seller. But when we see sellers like that really care about clients, that's how we treat our clients too. And overall, that's going to help value, right? Like we see that it's goodwill, it's a little bit of that, but it also just it's the client support and that we like to see. And if someone's already doing that, great. You don't need to be up to speed with every program that's out there, but if you've got those relationships in place and you're willing to pass that on to a qualified buyer, like that, you're in a good position at that point.
See, that's an example of what we were saying earlier. Like sellers, if you want to make more money for your business, de-risk the opportunity for the buyer. And so that seller's getting ahead of it and saying, hey, here's some risk of these contracts not transferring over to our buyer. I'm going to get ahead of it even before closing. And I'm going to contact all of my clients and be like, I vetted this person. He's taking over. You're in good hands. And he's making sure that these clients are happy to transition to our buyer. So it's like, that seller is getting more because he's de-risking the opportunity for the buyer. And that's critical. One of the things I wanted to circle back on accounting real quick, James, because you come from, you have that background, especially
I
with
do.
property management. And this is actually something that I'm dealing with right now. Connor and I were jumping on a call tomorrow with a seller to talk about some accounting mistakes that we're seeing in their business, right? And so one of the things that I see a lot in businesses, one, if you want to get more value, get all of your personal expenses off the business, right? You don't want to be riddling your business. If you're trying to sell it, you don't want a lot of ad backs for the buyer, like, because that's all guesswork. It's all estimates. It's all hypothetical, right? Remove it. Just have the business be clean, right? But one of the accounting mistake that I'm dealing with right now, I've got to have a call with a seller tomorrow to talk about, okay, you think your business is making seven figures in gross revenue. Turns out your accountant has been counting gross rents
Ooh,
for your revenue.
ooh,
And they're like 1.6 million in revenue every year. And I'm like, wait, 103 or 1.3 million of that is going back to the owners because that was their portion of the rent. So it's like, I don't know why people do this, but they count gross rents as their revenue. And I'm like, that's not your revenue, right? Don't count that as your revenue. But what are some other mistakes that you see in accounting wise in the property management space?
Yeah, so maybe just on that regard real quick, don't forget everybody, we 1099 owners for that income, right? That's why it shouldn't show up on our side of things. Yeah, I mean, other things that I've seen is a lot of property managers get in a real bad habit of journal entering their way out of any the mistake they might make. And, without having, I'm not a schooled accountant, by the way. I learned accounting through my role in a property management business. But man, people get in a really bad habit of journal entry and stuff out of the way. And so, when things aren't lining up right from account to account, well, there's a really simple method to resolve that. And it's just a large journal entry that, oh, well, we didn't know what that was for. We're not really sure because we didn't reconcile our account for 6 months. So we're just gonna you know, let it go kind of through journal entry. And of course that historical stuff is so hard to find. And so like sometimes what we'll find is because of some entry like that, one of the accounts is low. And the reality of that is guess who owes money into that account? You do. So that can be a really big pill to swallow. Like Hunter, I'm kind of an operations guy, too. And so like the biggest thing for me on this side is like, man, seller, if you are not in the habit of keeping up with your reconciliations, our books team here that I helped build in my previous role is doing your reconciliations daily, right? We do them daily because then that thing that happened yesterday, we find it the next morning, right? And then
Sure.
you're like, hey, what was that? $50,000 left. Oh, had to pay this huge bill for an owner or whatever it is, right? But it like that. And those are those things that you let them continue on and on and on for many years. Well, you're going to forget that $800 check that you wrote to Joe's handyman that you forgot to enter in your management system, and you're never going to remember what it's for. And again, the reality of that is you owe that money. That is your money that you now owe to the account. So, you know, I mean, there's all of those different things. Anything that you don't have very specifically organized that you're trying to journal entry out of, and journal entries are okay sometimes. But if you're trying to journal entry yourself out of, past due bills that you're not sure what they were for, or maybe a transfer for management fees, like that's where you're really going to find that some deeper forensic accounting is needed. And the reality of that forensic accounting is it's really challenging, and it either comes down to yes, you're going to pay somebody tens of thousands of dollars to come in and consult and do that forensic accounting. But the reality of the forensic accounting is they don't know the answer either necessarily. So if they're not able to get in there and clearly see that it was for some work order or whatever it was, the question ultimately falls back onto you, which is what was that money for? And if your answer is I don't know, then the answer is you owe that money.
Yeah.
So that's kind of the harsh reality of it. And of course, why, from an operations standpoint, and, some of the things that we've built at PMI to really help our franchise network with is that books piece, because it is such an important component that is often an afterthought, right? The majority of us are out there trying to worry about growing our business and managing our team. And sometimes, unfortunately, accounting can kind of just become that necessary evil that we decide not to prioritize. And I can assure you that it's not the right thing to do as you consider selling your business. And I'm sure if an auditor knocked on your door, you'd probably, fly to Mexico really quickly because you might end up owing some money.
I just like us being able to rely on your team for that quick insight too, right? Like we try to get you involved, as soon as we have a signed LOI, and for you guys to dive in and pull out some of those red flags right away. That makes our job a little bit easier too.
Yeah, like an actionable thing that you guys can take away if you're listening in is like go look at your last reconciliation. See if there's any uncleared items, money in or money out that is like older than 30 days. That's the stuff that we're really talking about here that I'm worried about. Because that's just the stuff that it's so hard to remember what you did 3 months ago, 30 days ago. I mean, even a week ago, I don't even know what I had for breakfast today, like that sort of thing. So I forgot to bring a shirt. So I had to go find a shirt in the office and put a nice shirt on for the video today. So, I get it. I think we all get it that life happens and, things get prioritized over others, and door growth, as we've kind of talked about, ultimately often takes precedence. But yeah, as you position yourself to sell, there is nothing better for me than when I can look at those financials and just within a half an hour say, "Yep, guys, this looks good," and then from there, Hunter and Aaron take over, and it's great.
I'm just thinking about too some of the, like, we're working on another deal right now that actually had some books that needed to be cleaned up, and it's setting a record. It's over a year in the works. That is not common for us at all. Hunter's his blood pressure is suffering due to this deal, but had they worked with us a little sooner, we could have given them some corrective items to work on. Unfortunately, some sellers just talked to us a little bit too late, and they're already kind of mentally done with the ops of that business, and they just want to hand it off, and they'll get more for their business because the bank will be more confident in the deal and we could bring it to the bank sooner. It'll be a quicker process if we can just, the sooner we can talk and kind of give some guidance, the better. And so I mentioned that kind of weekly due diligence call that we have with one of our buyers. Realize that those calls usually have anywhere between 4 to 6 PMI team members on them. So our buyers are getting a huge amount of support from our corporate resources here. It's like I said, we only want to do good deals. And sometimes we break people's hearts and say, hey, this is not a fit for us. We might break our buyer's heart and say, hey, this is not a deal you want to do. And so we're super
Yeah,
transparent.
we've had that conversation
Yeah,
many
I remember
times.
that with somebody specific. Yeah, we're on the West Coast.
Yeah, we'll tell them to run when they should run, So, but like I would just say, like, for 2025, we'll probably end up doing around 20 million in transactions across the brand. And we're not slowing down. Our team's growing. James, your team's growing. And like, if we're gonna hit a big goal next year, like what do you need from our team? Like, we're gonna rely on you, but like, what is there anything that we can help you with?
Just a heads up, man. This is a big priority for us for sure. It helps us immensely, in goals that we set forth for the year. And, of course, we've been talking a lot about same store sales and, seeing that growth of our franchise partners over time. So essentially same store sales, maybe just for everybody, is essentially like looking at the business at a specific point of time, and then essentially annually at that exact same time you're reevaluating them, right? At its simplest terms. So goals that we set forth as a team here, acquisitions, of course, helps support us. And so you guys are some of my favorite people to work with around here.
Yeah, I hope so. Okay. The feeling's mutual. Okay. But yeah, no, this is still super fun for us. Like, we're just glad that we've got other resources just beyond Hunter and Connor and myself. Like, it really does take like a full team effort to have a smooth transition. And we know of other buyers that have bought other PM companies and have had to hire out these consultants to help with transition. Like, that's literally what our team does. Like, we only do PM business acquisitions, and our support teams only help, transition and grow PM businesses. So, like, it's a natural fit for us to just keep, growing and really exploding in this market. Like I said, 26 will be a big year, but we've gone over goal essentially. I'm trying to think, Hunter, when you came on board, like, it's only multiplied every year. So yeah, expect to be really busy with acquisitions in 2026. And I would just say, even for people that are selling, and if you think you're trying to sell within the next 12 months, like, your conversation, if it didn't happen yesterday, it should happen today. Really getting you prepped for it, because it might take a little time to clean things up and prepare. And you can work with our team to do that smoothly. Like I said, we've gone through enough of these. We're 450 transactions roughly as a department. And that's only, I was talking to Jeremiah about this today. We've actually done over 500 transactions, including franchise resales. So, I've helped people sell about 50 or more businesses too. So when you are thinking about, selling, just realize there's really 500 plus transactions under this team's belt too. So it's very industry specific. We're not business brokers. We are free consultants in the space. So obviously, our PMI network benefits because they get to buy these businesses, and we only bring in qualified buyers. We're not gonna, if we've got 4 buyers in one market, we're gonna bring a qualified buyer for your business. But yeah, I mean, that's a little background into us. Obviously, we kind of chime in about some of these high level points like a little bit of self promotion in there. But yeah, it really does take a team. Like Hunter and I cannot do it alone. And so, James, you've kind of been in the background a little bit, but I'm glad you're on the podcast so people know that you're real. We name dropped you, so they need to have a video
Yeah.
evidence of this.
Oh, it's so fun for me, man. I mean, I could talk about this. I could talk about the perfect business that I would want to buy all day, and not to get us off on another tangent, but I mean, it's even just more than just the things we've talked about. I mean, your team that's in place, the way that you're structured and how you've modeled the way that that team effectively manages properties. So if you're in more of like a pod model or portfolio model, or maybe you even just have a bunch of agents who are kind of dabbling, like again, all of those things are definitely things that we want to look at. We've just, by nature of our industry, we've seen both the really high highs of great success and amazing acquisitions and converting businesses, and seeing a business grow from 0 to 1,000 doors. I mean, can you even imagine just watching that? It's the coolest thing. But we've also seen the flip side of that. We've seen the dark side, as Hunter might say. We've seen the Sith Lord, come into some of these businesses and wreak havoc, So, we've seen doors leave because a team member leaves, right? They're like, oh, well, I can do this. I can go take this on and start their own property management company. And now you've lost a property manager and 100 of your doors, right? So yeah, it's really interesting, just the entire relationship we have with the client. Their lifetime value with us is huge. Door count, of course, is a big thing, but for me at least, the ratio is more important than the door count and the revenue per. That sets us up for a really good runway where anybody looking to buy that business feels confident that they're going to find success with it. I mean, that's the ultimate goal, right? No one's buying a business just because they want to, right? There's some financial goal in mind. And yeah, so just a strong business operationally, a strong business financially, um, is going to demand more money.
Yeah, we're seeing a lot of, I'd say, the buyer networks that have kind of, in some cases, slowed down. Some of the bigger companies that are out there buying up everything, maybe paying too much, have slowed down. I mean, we haven't slowed down at all. It's because of our model, I think, mainly. Like, we're not the buyer in this scenario. We're a zero debt business. Like, we have buyers that, are taking loans for these opportunities. But um, like our model and our local buyer model, I think is really our strongest play with acquisitions. Utilize a national resource to help with the transaction and the diligence side, and also that transition side that you mentioned being so critical. All of that is just to support a local buyer. So pretty cool every time we kind of reflect on that, like what makes us kind of unique in the space.
And it's really fun role that we're in doing this kind of work for people because you know what I always say, like I'm in this because we're changing people's lives, seller side, buy side. We're changing both of these lives. Like their families' lives are going to be drastically different working with us and doing these acquisitions. And our buyers, they're able to do this not just because of Aaron and I, but because James, because your team and the rest of PMI. And it's kind of cool. Our goal is 50 million next year. That's just I want that to be the new standard. Like we're going to be doing 50 million every year because we're bringing on more and more franchisees and everything. And it's like we want to do 50 million in transactions every year because that's changing sellers' lives. You know, putting $50 million out into the market for families. Hey, we're paying this out to take over your business, and that's going to change your family, right? But so it's kind of cool that we're going to be going for 50 million each year, but it's also like, I want the world to know, like, I want everybody in the United States, PMI, we are the property management buyers. What we're working on right here is I want to be able to create it's like a management training ground here where we can take property management offices, teach them how to buy a couple of businesses to roll it up, get them to an 8-figure level business that they can exit from. They're not going to be doing property management forever. I don't know how long, 10, 20 years of doing this or whatever. And it's like, great, now you have an 8-figure business that you can exit from. And now you know how to go and do this again yourself, right? Like you've joined PMI to learn how to do this, learn how to be a really good business operator, learn how to buy businesses and transition them and combine them into one cohesive unit. and learn how to sell that thing later down the road. And then, that's, you just taught a man how to fish. James, you're a fisherman. Like you just, not only did you give them the fly and the bait and everything, like you just taught them, hey, you need to go dive in this. You're looking in this section of the pond here. Like now you know how to go catch a fish for the rest of your life. And it's a really fun model that we have here.
Yeah, it's cool. Like, yeah, I don't know how you guys see it, but I definitely don't see us as like an institutional type of company. To Darren's point, it's like, a lot of the benefit that, from my side, of course, that we get is we see a lot of really successful small businesses. I mean, it's like that's the game we're in. We're definitely no BlackRock, if you will. That's for sure.
Yeah, we're in a super unique position. And even when I'm telling people about PMI that are not familiar with it, they're like super intrigued by the model. And then I tell them why it works and how it's been going and kind of where it's been trending. And it's super interesting, especially for our space. Like property management specifically is interesting. Most people don't realize this because we promote so much of, residential PM businesses, but we do a fair amount of association management. We do short-term rental, we do commercial, we do ancillary type businesses, including maintenance, and some janitorial elements too. So like we really are kind of expanding all these other ancillary kind of industry adjacent to just traditional property management, right? Most people think it's a stack of doors. Sometimes it's larger multifamily. Sometimes it's commercial, like I said.
There's
But yeah,
nothing
like
I like more than a good deal with residential and commercial. That's my world. So love that.
totally.
Love those.
Me too. So I'm actually seeing like I'm hoping that commercial trends up a little bit more too. Just like even I've seen some like light industrial type ops, but I think there's still this world of like sub 5 million, sub $10 million commercial and even multifamily companies that are going to be true targets for us. I'd say like historically, we focused a lot in sub $5 million transactions. And I mean, we're seeing our own buyers exceed those values. And we have plenty of buyers that are like, hey, I want to build this up to a 10, 20, $50 million company and are working with Hunter and myself on like a series of acquisitions. So like we're not slowing down at all. And we are kind of, chasing some of these other management verticals too. So even a mixed portfolio for us is exciting. Some buyers, they say, no, I'll only buy residential, only singles up to 4 or 6 units. Like we like a good mixed portfolio. It's got a little HOA in there. Fine. It's got some residential. Like we're a unique buyer, I think, in that standpoint that we manage all of that.
Yeah, it's a huge unique identifier for us. I mean, definitely, especially as you might even look at some other people who are kind of a little bit more true to our model. Like we're the only one offering a multi-pillar model. It's amazing. And I think from the commercial side, it's really interesting too to talk about is like residential's really mature. So is commercial, but commercial just the climate, if you want to call it, of that industry is a little bit tighter, meaning like for somebody new trying to enter the commercial management space, it's a little bit of a steeper climb, right? Like where we're finding most of those for our folks currently doing commercial is like, oh, they have a residential property owner who just found out that, PMI also does commercial. And they're like, hey, will you manage this for me, right? Or some relationship you've maybe had through a broker, something of that nature. But acquisitions we definitely see as kind of, top tier of the strategies we're looking at to really grow, our commercial pillar as well. We manage today close to 2 million square feet of commercial space. But yeah, because it's a little bit of a steeper climb, we don't quite see the same amount of like accelerated growth for people who are doing residential as compared to commercial. But it's then like once you crack that, then you're in, right? And you're in the club. And so yeah, we see acquisitions as a really awesome strategy to help us grow that side of the business.
I was just thinking about our Arizona guys and
Yeah, there you go.
we've worked with a PMI office down there. I think in total we've probably done 8 or more transactions with them. Hunter, do you know, is it about 8 or more with that office?
Uh,
It's up there. It might be more.
yeah, 7 or 8.
Yeah. And so
Is it more than 8?
they're actively targeting commercial now to, I mean, they actually already maybe one of our largest operators in that space.
They are, yeah, I think top 3.
Okay. Yeah, and so I know that they're actively targeting commercial too. And so I think we will see that trend come up. I think we're going to see more multifamily. Um, I mean, we have a amazing amount of kind of pipeline deals that are coming through, and the majority of them being kind of residential focused. But um, as far as like, we're talking a lot about 2026 planning ourselves just on our team. Like, what are you guys seeing just kind of as we wrap things up? Like, what are you expecting for 2026?
Oh man, it's not even Halloween yet, Aaron.
You got to plan ahead, man. Where
For us, as soon as Summit hits, we're on to the next year.
Yeah,
Jeez,
maybe to like give some
we're on
insight
the-
is, we see about like year over year, if you kind of look at it on average, like we typically see about 20% growth of the pillar. So I think that's a pretty realistic expectation of like what we'll see for next year. So, somewhere in the range of an additional 5,000-6,000 doors under management. We're of course going to set our goals much higher than that, but I think that that's maybe a realistic kind of view of that. So end of 2026, get me back on the podcast, and I'll be telling you that we manage more than 40,000 residential.
Now, I'm thinking we just double those numbers, man. I'm like,
Let's go for 50.
Rookie numbers. Got to get those numbers up.
We're gonna bring you at least 10,000 doors or more.
Yeah, there we
like,
go.
Easily. Like, I'm not even worried about that number. So.
Like I said, man, you guys are really important to our equation as it relates to those numbers. So absolutely.
It's for sure a team piece. Like, we couldn't do what we do without the rest of the squad. Like, we really do rely on a lot of people here. I feel like I'd love to we should probably plug in a employee photo at some point so they realize it's not just 2 or 3 people on a podcast. Like, there's literally
that's right.
There's 100 people here that are making the thing happen. So
meet the team.
Yeah, for sure. No, but definitely appreciate that. But yeah, no, thanks for jumping on here. I know, like, we'll rant a little bit. Obviously, it's always fun to chat. And I think our whole office, we all get along really well and work together well. So
yeah,
I don't know if every office out there can say that, but I think we can confidently.
No, I think so too. And
we vibe.
Yeah, for these sellers, like that's again like something you got to think about, man. If you have really strong culture within your business and those team members are strong, I mean, it's so people are so important to this aspect, and
Totally.
put a lot of value in that.
Completely agree.